Joining me now, Jeremy Schwartz, Global Chief Investment Officer at WisdomTree. Jeremy, thanks so much for joining me at the desk.
It's a pleasure to be here. Thanks for having me.
So Jeremy, we're talking about turning global volatility into opportunity. I want to talk about some of the things causing that volatility, namely geopolitics and trade, and of course, interest rate policy. But before we get to that, I want to ask you about gold, because gold continues its run higher, continually hitting record highs, trading above $41.50 an ounce right now. Some might look at it as a hedge against volatility, as a means of diversification, a safe haven. How much of it is that, and how much of it is geopolitics driving this run higher, and are we nearing the top?
And you've got a name for the trade at the moment called the debasement trade is going around the desks this week as people talk about is the debasement trade on, what is really driving this gold price higher. You know, gold has had a very unique role. Like, it's been one of the monetary assets used for thousands and thousands of years. People look at it as a store of value. Now you have crypto as, you know, as Bitcoin, the new digital gold, and a hedge. And we talk about, you know, if you look at just the last week and sort of the sell-off in crypto over the weekend, you had all these leverage trades on, and there's a huge crash down in crypto. So, like, was it a safe haven hedge the way people are thinking about that? It's hard to argue that case, but gold has a different role as a ballast in some of this long-term purchasing power protection. I've done a research with Professor Jeremy Siegel at Wharton. He has 200 years of data, and gold kept up with inflation over 200 years. Like, basically provide protection from inflation over different periods as better returns. But I think it is a useful hedge asset from that purchasing power perspective.
Do you think it can continue its run higher, though? Because we have seen such impressive gains at the same time that the market has been gaining as well.
This year has been very hot. The last few years it's been hot. I do think it has a role. You're finding central banks saying, you know, maybe I don't want to just have all my money in dollars. Maybe I'm using it as another diversifier. There is questions about debt and deficits around the world, and our bonds really, now you don't get any income off gold like you do U.S. Treasuries, so very different place. But there's definitely a role for gold in portfolios.
Okay, so let's talk about how investors should be positioning their portfolios amidst some of this global volatility. Should they be looking at traditional safe havens at this point? Should they be looking here in the U.S. or maybe abroad?
We talk a lot about, you know, what we call the equity risk premium, and that's comparing the earnings yield on the market versus bond yields. And, you know, the 10-year bond in the U.S. yields just 4%, but on an inflation-adjusted basis, it's below 2%, like 160 to 170. Now, at 170, it'll take you almost 40 years to double your purchasing power with that kind of yield. Stocks, yes, they're more expensive than normal, but we're talking a 4 to 5% earnings yield. That's more like 14 to 15 years to double your purchasing power. So we'd say stocks are still a very good deal versus that safe haven of U.S. bonds. But there's more volatility with stocks. But I think if you're looking out over long periods, stocks are still a very good place to be.
And you have a particular ETF that you actually say is geared towards turning global volatility into opportunity.
Yeah.
It's the Geo Alpha Opportunities Fund, ticker symbol GEOA. You overweight allies and you underweight vulnerable regions. So it sounds like you have both domestic and international exposure with this ETF. But tell us about the strategy, how it works.
I think geopolitical risk is very top of mind, from the tariffs that we had to the war to in Europe and Russia, Ukraine, you have Asia, underlying tensions with China. So how do you think about this shifting geopolitical order? It's not just to be defensive and crouch afraid of things. It's to go for advantageous opportunities that come from all this shift that's happening. And we think we're in a defense tech super cycle. So this is not a short-term one-year thing. This is Europe is spending majorly on defense. You look at all the great innovation across time. The internet came from DARPA defense spending. Cell phones came from spending on military over time. So the huge spending we're going to have on defense in Europe, in Japan, we may have a new prime minister in Japan who's all about Japanese defense capabilities. This is going to lead to a surge in long-term innovation in technology that we think is supportive. And then you got to find, what are those opportunities? We like Europe for that. We like Japan from that. We're underweight China as a result of all the tension, and we're even underweight the U.S. in that portfolio. That's a global portfolio, and we're trying to find the best opportunities where these defense shifts are happening.
So global portfolio, but still a lot of big tech exposure as well. I saw some of the biggest holdings are some of the names that we talk about all the time, some of the Mag 7, the AI names.
Well, interestingly, Intel has been a top position for us, and that's been one of the things that we called before the U.S. invested in Intel and before it sort of took a big run. We do think Meta is a key player in sort of all the data that they have and sort of being an AI leader. So it is, yes, it's not as concentrated in the Mag 7 and not as much in the US, but it is trying to be a combination of this geopolitical shifts and finding where in the world you want to be there.
And it sounds like you know, obviously you are still saying to invest here domestically, but want international exposure as well. This year, the narrative has really been around, or it started the year around international outperformance. Do you expect international markets to continue their outperformance, because the U.S. stocks have really played catch up?
It's been a 15-year period. So U.S. exceptionalism has worked for the last 15 years. And it's like a 400% cumulative outperformance of the S&P 500 versus the foreign market. So you saw a little dip down in the U.S., then international, they came right back. The valuations, the S&P is more expensive than normal. International is much cheaper than normal. We're talking like a third of it, like a third off of the U.S. multiples, and usually it's 15 to 16% off. It's usually cheaper because they don't grow as fast. But so that's the opportunity, is that it's so much cheaper than the U.S. and they have an inflection in the earnings environment because they're now doing all this new defense spending. And we think that will have this positive spillover to new technology that they develop.
So as we head into the final stretch of the year, what's the one theme that investors can't ignore? Is it gold? Is it trade? Is it Fed cutting interest rates? What is it?
Well, I think that Geo Alpha that you talked about summarizes it all. It has exposure to this global portfolio. It has the shifting geopolitical order. It has the tech and the spending. If you took one country, I think Japan has been underloved for many ways. It's really still seen no inflows this year. And so our Japan opportunities kind of idea as part of Geo Alpha is one of those countries that we also like.
Yeah, I noticed Japan's second biggest country allocation in the ETF behind the United States. So as we think about the biggest opportunities heading into 2026, what would you say those would be?
Well, I think it's a little bit more of the same. We're going to have more volatility with this geopolitical shift. The AI narrative is continuing. That's not stopping. There's going to be a lot of spending it's an arms race there for tech. They need for all these LLMs and the spending on CapEx that's not slowing down. And so it's going to have, people are looking to keep investing. And I think you've got to look for other areas beyond just that Mag 7, so everybody has exposure to that.
But despite the volatility that likely will ensue, you think this is a market that can continue to head higher?
We do still like stocks versus bonds. I think gold finds its way to diversify this sort of purchasing power of the dollar over time and the debt and deficit issues. So that's a useful thing. But we still like stocks for the long run is our main theme.
All right, Jeremy, thank you so much for sharing your insights.
Thanks for having us.
That's Jeremy Schwartz, Global Chief Investment Officer at WisdomTree.